Morning and welcome. You're watching Market Cafe on ET now. The Nifty climbing above 18,700 yesterday, showing a bit of positive bias already at the start of trade today. But we'll start off. We'll update you with everything that you've missed out on since yesterday, where global markets are placed early today morning, as well as what companies to focus on, which companies have come out with announcements, and what kind of announcements have they come out with. But first off, let's have a look at global markets. Good morning, Ankita. That's my co-anchor, Ankita Saxena. Good morning, Ankita. Talk to us about how global markets have done.
Good morning to you, Harsh. So yesterday we did see a bit of a sell-off coming in the US markets, except for Dow Jones, which was the outlier yesterday. Now yesterday the S&P 500 and the Nasdaq Composite closed lower, with the broad market index fluctuating near its highest closing level since August 2022. Now remember, a day before we had seen all these indices hit the highs of 2023. So that's where they are hovering at, and the S&P 500 ticked down 0.3%, and the Nasdaq Composite ended the day 1.2% lower. Now, the Dow Jones Industrial Average was the outlier among the major averages, adding 91 points in yesterday's trading session. Now, the energy stocks were the best performing stocks in the S&P 500 sector, rising about 2.6%. And the regional banks, of course, are seeing their share gains continuously for the past few days. Now let's look at the European markets. European markets closed slightly lower. The Pan-European Stock 600 index closed 0.2% lower, with sectors pointing in opposite directions. DAX was down 0.2%. FTSE was marginally down 0.05%. Very marginal cut, and CAC was down 0.09%, very flattish, but ended the day in the red. Also in the US, we are expecting the weekly jobless claims and the wholesale inventories data that will be coming out today, and that will have a big impact on the rate cuts that are due, the policy meeting that is due on the 13th and the 14th of June, and everyone will be looking out for that. But we are expecting that market is already priced in a 66% chance that Fed will keep the rates steady for the next meeting, because we also had the Fed President Robert Kaplan, who said that the Fed should take a hawkish pause in the June meeting. So that's what the market is actually penciling in, Ash.
Right, absolutely. And the real big one today is going to be the RBI MPC.
Absolutely.
So we have a long day ahead in front of us, and you'll catch all of that on ET now. But very quickly, moving on, we'll talk a bit about that later. Let's talk about crude, right? WTI, which is slightly lower in early trade today, but it's risen nonetheless. So versus yesterday, we're looking at around 72.5 on WTI crude, and on Brent we are just below that $77 a barrel mark. Mind you, it's fluctuating in that $76 to $77. If I refer to Brent, that's the band. It's locked in that band at the moment, and it's also due to various factors. You have the US dollar, that's one piece of it. The other piece of it is the fact that the market is trying to judge how demand is really moving with all of these rate cuts that have happened. So what we are seeing is that post the price cut, post the production cut, beg your pardon, with regard to what Saudi had done, earlier last weekend, you had Brent crude moving to $77 a barrel, after which it came off on the back of demand worries, and now it's jumped back up to $77 a barrel. So really demand is playing the role at the moment and weak Chinese export data is also adding to some of the woes with regard to oil. So a couple of factors. Also, you have US stockpiles which are continuing to consolidate, it seems. That's what most analysts on the street believe. So a couple of those factors playing out with regard to oil, but really no major move that oil is currently seeing. Around $77 a barrel is where Brent currently is at. Back to you, Ankita.
Right, Harsh, and then quickly let's take you through all the events that we will be tracking very closely today. From US, I just mentioned that we will have the initial jobless claim data that will be coming out. So far, we have seen a rather robust labor market in the US, and that could have a bearing on the interest rate hikes. Now, we also have the Eurozone GDP number that will be coming out today. And back home, we have the big RBI MPC rate decision that will be out today, and of course that is something that we will be tracking very closely and getting you all the updates. And in the IPO action, it is the last day to subscribe for the IQ IPO, and till now we have also, in the corporate action, we have L&T Finance that will be considering a final dividend on shares, and for Capacit Infra, we have a proposal for fundraise that will be under consideration as of today. So these are the events that we will be tracking very closely.
Right, thanks for that, Ankita. But straight to the macros, let's go. The US trade deficit has widened in the month of April to the largest in 6 months. This is on the back of declining exports, which fell by the most since the start of the pandemic. The shortfall in goods and services trade grew by $14 billion. That is a 23% uptick from the previous month to $74.6 billion. Meanwhile, exports in China plunged 7.5% year on year to $283 billion. Data shows a decline for the first time since February this year.
Bank of Canada has gone ahead and hiked interest rates to 4.7%. Rates are now at a 22-year high with no signs of easing. Analysts anticipating another rate hike next month amid an overheated economy and stubborn inflation. Do remember, the central bank had kept rates on hold since the start of the year, only to see the impact of the previous 8 hikes, the fastest tightening cycle in the bank's history.
Right, we'll switch over from business. Staying with the news flow from Canada, New York City's air pollution ranked the worst among the world as wildfire smoke from Canada continues to drift over adjoining areas. As many as 20,000 people have been evacuated across Canada, with more evacuation plans waiting to be executed. This is the second day of the orange haze clouding visibility in cities. Authorities have also asked people to wear masks outdoors.
And shifting focus back to macros, Japan's economy grows more than expected in the January-March quarter as post-pandemic spending helped offset the hit on exports due to the slowing demand. The GDP figures expanded 2.7%, much higher than the economists' expectations of 1.9%.
Right, and in some stock-specific news from Wall Street, video game retailer GameStop has fired CEO Matthew Furlong without providing any reasons for his termination from the post. The company has instead appointed board chairman Ryan Cohen as the executive chairman effective immediately. Shares of the gaming giant plunged 20% in after-hours trade.
An Organization for Economic Cooperation and Development (OECD) has slightly raised its global GDP growth outlook for this year to 2.7% from its previous estimate of 2.6%. However, with the exception of 2020, this is the lowest annual growth estimate since the Great Financial Crisis of 2008 and 2009. And the revision comes a day after the World Bank raised its growth outlook for the year.
Right, and in good news, the European defense manufacturer ThyssenKrupp Marine Systems and India's Mazagon dock shipbuilders are set to construct submarines for India. We have Sumit Chaturvedi joining in with all the details on this one. Sumit.
European defense manufacturer ThyssenKrupp Marine Systems and India's Mazagon dockyard shipbuilders, they have signed an MOU to bid for building submarines for Indian Navy. India is going to construct around 6 submarines at the cost of around $5 billion. Both companies will jointly bid for these projects. The development comes at a time German's defense minister is in India. He met Indian Defense Minister Rajnath Singh as well. Now, German and Indian defense ties are moving in positive direction at a time Russia and China are coming closer. It's also coming at a time when Russia is engaged in a war with Ukraine. Under the MOU, ThyssenKrupp Marine Systems will be responsible for engineering and designing of the vessels, while Indian company will be responsible for delivery and construction of these vessels. It's a change from 2 years ago when ThyssenKrupp, the European defense giant, was not interested in bidding for these submarines, but it has now come a full circle and it's now interested in doing so, and that's why it has signed an MOU with an Indian company. Clearly the ties are moving in right direction. India currently has one nuclear submarine and 16 conventional submarines, and the deal is for conventional submarines only.
And it cannot get any bigger than this. In a mega network exclusive, OpenAI co-founder and CEO Sam Altman spoke about the future of AI, its impact on the job market, and how mankind can harness AI to its advantage. Now, talking at the event, which was attended by the who's who of the corporate world and experts, Altman said that India has truly embraced ChatGPT. Meanwhile, on the much debated topic of impact on jobs, he said historically each tech revolution has led to changing on job market, and while ChatGPT will not cause any existential crisis, the same cannot be said about ChatGPT 10. Listen in to what he had to say.
The main thing I would say that's interesting about it is its generality. There's a lot of other systems that can go do this thing well or that thing well or this thing, and you know, in many cases better than ChatGPT. Some not, like there's probably not a AI that can write a better poem or whatever, but you know, other categories you could find something that's maybe better. But the fact that this one system is truly general purpose and can do so many things means that people are integrating it into their workflow as a very powerful tool. And so the same thing that can help you write computer code, one of the areas that we've seen the biggest impact is what coders are using this for, doubling, tripling their productivity. You know, there was a paper that just came out that when Italy temporarily banned ChatGPT, developer productivity like fell in half on like a fairly big study. But it can do that. It can also, you know, help you find information. It can help you write a poem. It can help you summarize documents. It can translate things. And people are using this, which we hoped would happen, as this sort of super assistant that just makes them more and more productive. And it's that generality that I think is the coolest part.
So with so much ability that maybe even you guys haven't even thought about how people are using it when you developed it and launched it, I'm sure you've seen a lot of interesting use cases right here out of India itself. Can you tell us something, or just give us an example of something you've seen that's really inspired you, that you've seen come out of the Indian market?
So India has been a country that has really, truly embraced ChatGPT. In a way, maybe you can tell me why. I'm sort of curious. I'm hoping to learn while I'm here. We're very delighted. But there has been a lot of early adoption and real enthusiasm from the users. One of the very earliest things, like in the first weeks of launching ChatGPT, we heard about a farmer in India who wasn't able to access government services, and via like ChatGPT hooked up to WhatsApp in some sort of complicated way was then able to. And that was like one of the early things where we're like, we did not think that was going to happen.
And just to expand on it, so what I've understood about OpenAI is ChatGPT is one implementation of the things you've built, but you have capabilities to real-time translate, to transcribe audio into text, and are you seeing people use these in combination in ways that are surprising?
Well, we recently launched an iPhone app that has speech recognition in it, that's hooking up two of our models together, and people love that. But the main point that I would like to get across is none of the current systems really matter. Like, we're going to look back at GPT-4 and, I don't know if any of you have like picked up the original iPhone in recent years, but it's like, wow, I cannot believe we were excited about this. Each pixel's like that big, it just feels like this like incredibly antiquated thing. The curve here is going to be much, much steeper. And what the systems are going to be capable of in the not distant future, we think, is going to be very dramatically different.
Right, welcome back. On the back of an absolutely flat to negative US market, let's quickly look at how Asia has opened up in early trade today, because the early signs do not seem the most positive. We're seeing around 2/3% of a cut on the Hang Seng already. So we're seeing the Hang Seng slightly lower. Let's also look at Shanghai, which is the other Chinese index, also trading with a slight negative bias, around 0.4% lower on the Shanghai as well. Let's look at the Kospi, also trading lower largely. We're seeing the Kospi, which is down around 1/5% or thereabouts. ASX 200 also lower. We're seeing a slight bit of a cut on the ASX 200, slight negative bias coming in, 0.1% lower. The Nikkei is also trading in the red, around 0.1% in the red. So largely all Asian indices trading lower. We're seeing an absolutely flat start, which the SGX Nifty is currently indicating to us. But of course, yesterday, the Nifty strolling away above that 18,700 mark. That was a positive, and we're only 150 points away from an all-time high. So have to wait and watch how that plays out today, Ankita.
That's right, and SGX Nifty is pretty flat, just 4 points up, just 0.02% up, and a rather flat start for the Indian markets as well. That's right, all eyes out on the MPC meet today, and it is widely expected that the benchmark interest rates will stay unchanged at 6.5%. The decision is expected today, and so what are the nitty-gritties of it? What should we expect? And what are the considered options of the opinions of the market with all the data before us? For that, we have my colleague Harsh, who's standing by with all the research and all the number crunching. Over to you, Harsh. Tell us what is the market penciling in?
Right, Ankita. So you're seeing a pause. That's what the consensus expectation is, that the RBI will do nothing at the moment. And there's probably a chance that they will switch their stance from withdrawal of accommodation to neutral. So that could be one piece of change on the cards. But let's quickly take it to data, right? You're looking at inflation, which is coming off, and coming off quite steeply. You were seeing a 7.8% print in April of 2022. It's currently down to 4.7% on a higher base, but nonetheless it's coming off. So that's a positive, and you're seeing global inflation come off as well. Let's look at inflation for for FY24. 5 to 5.5% is where we are putting that number. Let's quickly take it forward on to what the central bank policy rate currently is at. It's moved from 4% last year all the way to 6.5% currently, but the US has seen a steeper rate hike than India. Let's look at the impact on growth. Growth not really impacted, 7.2% growth in FY23, and what we are seeing is on a base of 9.1%, that 7.2% is quite good. It's around 20 to 30 bips higher than most people anticipated. And that 5.9% number, which the RBI projects in Q4, may undergo a slight change, because in Q4 of FY23, the numbers came in better. High frequency indicators indicate a very solid activity, robust activity within the economy. GST collections, air passenger traffic, PMI on both manufacturing as well as services has remained elevated, and remained elevated quite well in a healthy fashion. It's not a 1 month elevation that we are seeing. It's multiple months of good, strong, elevated numbers in terms of the PMI. So that's very solid. That's a big positive, and you're seeing good UPI transactions. So at a ground level, you're seeing good activity within the economy. Let's compare last policy versus this policy, and let's look at some of the macro metrics. You're looking at Brent crude, which has come off. You're seeing the rupee to dollar largely flat, but these two numbers, the US 10-year yield as well as the India 10-year yield. The US 10-year yield has actually gone up. It's at 3.8% today, by the way. And you're seeing the India 10-year yield, which has dropped 30 bips. So the US 10-year yield has gone up, India 10-year yield has come off. That difference has gotten compressed, in fact. So keep your eye out. There are tons of things to look for in terms of even liquidity. But that's the larger picture with regard to the MPC's outcome today.
That's right, Harsh. While the market is, the consensus says that we will be staying with the pause and the interest rates will be maintained at 6.5%. We have Indranil Sengupta, who's the economist and the head of research CLA, who is expecting a cut in rates to begin from October this year. Now, he says that the RBI will consider the effect of El Nino and the Fed's line of action for the rate cuts. Let's listen in to what he had to say.
RBI's rate policy right now hinges on two factors. One is whether an El Nino hits, which looks increasingly likely, and that may push up inflation. So maybe the first cut will be in December rather than October. We have to wait and see how the rains pan out. Number two, it depends on what the Fed does. So our base case is that the Fed goes on a long pause. If that happens, I think the RBI can start to cut by October. But if inflation, core inflation in particular, persists at 0.4 month on month, which is like 5% year on year, then maybe the Fed will have to act, in which case the RBI will have to act. But assuming a base case of still normal rains and the Fed pausing at 5 quarter, we think that the RBI can start cutting from October. I think it will be, pretty much like last time, reasonably cautious given the sort of uncertainties that are all around us. So I think it will be, fairly a cautious policy.
Right. With that eye on the MPC, let's slip into a quick short break. More on the other side, we'll go stock specific.
Welcome back. You're watching Market Cafe, and it is that time of the show where we get you all the stock-specific action. And for that, we have my colleague Ashesha who's standing by with all the stocks that you need to keep on your radar for this trading session. Ashesha, tell us what are the stocks that we need to keep an eye out for?
Hi Ankita, good morning. So let's start off with Aether Industries then, and this is because the company has signed a letter of intent with US-based leading global oil field services company, and on account of this agreement that the company has entered into, company will earn a revenue of about 300 crores per annum. So on the back of this agreement, this counter will be in focus today. Let's also talk about Hudson Agro then, and this counter will be in focus because board of directors will be considering fundraising plans in the meeting that is scheduled to happen on the 5th of July. Let's also talk about Snowman Logistics then. Over here, a block deal happened yesterday where promoters bought about 0.67% stake in the company at about 40.02 per share. So promoters have increased their stake in the company, and on account of that, this counter will also be in focus today. Also keep an eye out on T-Tiger Wagons, and this is because a board meet is scheduled to happen on the 10th of July to consider fundraising plans. This could be by way of issue of further equity shares via your QIP, rights issue or any other mode. So fundraising plans coming in their way. Let's also talk about Mazgaon Dock then. This counter has been in focus for the last many trading sessions, and today also it will continue to be in focus, and that is because Minister of Defense of the Republic of Germany has signed a non-binding MOU for submarine project P75I. Let's also talk about Lemon Tree Hotel. This company has been on an expansion spree for the last many months, and now the company has informed the exchanges that they have signed a license agreement for a 60-room property in Andhra Pradesh. So on account of this news that has come in, Lemon Tree will also be in focus today.
Right. Thanks for that, Ashesha. Let's quickly move on though. Vamakshi is here. She's looked at all the brokerages. Vamakshi, talk to us about the key ones there.
Well, yes, let's start off with Devyani. We have a note coming in from Goldman Sachs, and the same-store sales growth recovery is unlikely to come in before March, the second half of this year. They're expecting FY24 EBITDA margins to be flat on a year-on-year basis, but it is Costa that has reached critical mass, and in fact, over the long term, it could be a value creator. Apart from that, Goldman Sachs also highlights that the long-term prospects for Devyani especially remain quite attractive, and they remain quite strong. And on the back of that, they've actually maintained a buy rating target price of 200 per share. The next stock on our radar is Zomato. We have a note coming in from Morgan Stanley. The near-term visibility as far as growth is concerned is seen improving. They do have a line of sight to get adjusted EBITDA margins of almost 4 to 5% on food delivery, and they're also seeing some good traction come in as far as Blinkit is concerned. The burn rates are seen improving. So on the back of that, Morgan Stanley has actually maintained an overweight call given a target price of 85 per share. Apart from that, we have HDFC AMC on our radar. We have a note coming in from Morgan Stanley, and they believe that the management has assessed the impact of the SEBI paper at almost 32 basis points for nearly 65% of their AUM, as well as nearly 40% of the top line. The company is likely to largely pass on these changes to the customer, and in fact, the net impact is expected to be much lower. Larger AMCs, in their opinion, will feel the impact of the SEBI paper more. So given all these factors, Morgan Stanley has actually maintained an equal weight call given a target price of 1,840 per share.
Thanks for that, Vamakshi. But, let's also take one more stock which will be in focus. In fact, has been in focus over the last 4 to 5 trading sessions. PB Fintech is up 7% over the last 5 sessions, up nearly 3% in trade yesterday as well. So that's definitely a stock which is buzzing. But we have a BofA note coming out today which downgrades PB Fintech to an underperform from a buy. Target price remains unchanged at 600. Mind you, it zoomed past 600. It's very close to that 650 mark now, the stock itself. And the stock is up 42% year to date. Now, with regard to why they've changed their target price, they believe the growth rate is going to slow down from that 80% number in FY23 to 30% in FY24. And the cutback on the ad spend is what will contribute to that particular number drop. Of course, PB Fintech has suggested that they are looking at profitability in FY24, and full year profitability is what they've guided for. But also, mind you, with that will come lower ad spends, because only then will they be able to reduce costs and get into profit. So that's what they are currently looking at, and that BofA believes may be a slight negative because the top line may not grow as quickly as anticipated, and hence they've changed it to an underperform from a buy. And of course, the stock has zoomed up nearly 7% over the last 4 to 5 trading sessions.
All right then, well, the oil ministry has asked the OMCs to reduce prices and wants the benefit of a drop in crude to be passed on to the consumers. However, sources have told ET Now that oil producers have decided to take further production cut and are in wait and watch mode. Well, Prakash joins in with more details on this.
Yes, it's a big development coming in as the discussion on providing relief to consumer by reducing retail prices in domestic market has been started within the government, and our sources in the oil ministry are informing that they want that the oil marketing companies should reduce retail prices because they are now in better position. OMCs by and large return to normal situation. If you look at their last quarter results, it was pretty good, and under recovery on diesel and petrol have gone away. In fact, they are making handsome profits on sale of petrol. So sources are informing that the government wants OMCs to cut down retail prices in domestic market and pass on benefit a reduction in crude prices to the consumer. But on part of oil marketing companies, our sources in oil marketing companies are saying that they are still on wait and watch mode because oil producers have taken a decision to take further production cut going forward. So what will be movement in crude oil prices? That is something we should be wait and watch. And it is fact that their last quarter results has been pretty good, but we should also not forget the accumulated losses that the oil marketing companies have at this moment. As per the details they have provided, that their accumulated losses on account of IOCL is around at 78,000 crore alone, and at present overall accumulated losses of industry is at rupees 1.64 lakh crore. So it is it's true that the government wants oil marketing companies to provide relief to consumer by reducing petrol diesel prices, but oil marketing companies are saying that their accumulated losses are still high and they will prefer to be in wait and watch mode for now.
Right, let's quickly move on. Thanks for that, Prakash. Jefferies has also released a note on the healthcare space. It states that Fortis Health and Max Health will be the top beneficiaries of the central government health scheme rate revision. Ashesha is here with more details on that one. Ashesha.
Well, yes, a whole host of healthcare companies will be in focus today, the likes of Max Healthcare, Fortis, Medanta, and that is on the back of this note that has come in from Jefferies. Now, the government recently revised CGHS or Central Government Health Scheme rates for IPD as well as OPD consultations and room rentals from the month of April 2023. Also, several media reports suggest that diagnostic and treatment pack rates will also be revised come July 2023. They also say that current rate revision suggests an average price increase in the range of 10 to 20%. This price revision could probably drive earnings for these companies, and on the back of that, Jefferies believes that Fortis and Max Healthcare are likely to benefit the most. They estimate EBITDA impact of about 3.5 to 6% from all of these companies that are impacted because of this price revision. These rates might be revised upwards more from here on, from the month of July. Diagnostics and treatment packages could be revised upwards anywhere between 5 to 30%. Max and Fortis have about 17 and 19% respectively revenue coming in from this particular segment, and Apollo and Medanta have about 10% contribution, and they will be positively impacted because of this price revision that has come in central government health scheme. So on account of this report that has come in from Jefferies on account of the price revision, all of these healthcare companies will be in focus today.
Right, then we will keep an eye out on all these stocks and companies that were mentioned. Thank you so much for that, Shesha. And we'll move on then. The Indian two-wheeler major Hero MotoCorp is planning a boost to its motorcycle business with the launch of a new program called Hero 2.0. Now, the program will involve an entire new range of premium motorcycles in addition to giving a new look to the stores and launching some new premium stores. Now, in an exclusive interaction, ET Now's Sumit Chaturvedi caught up with Hero MotoCorp's new CEO, Niranjan Gupta, to know the company's growth strategy for domestic market and its plans for the electric vehicles and global expansion plans. Listen in.
In terms of moving forward, look, we are very strong in the commuter segment. Priority is going to be to win in new segment. For instance, we are talking about premium, where we want to win, and you are going to see a lot of launches which are lined up in the current year. Similarly, another priority is going to be build leadership in EV, and that again, we've already announced that not just 10 cities, 20 cities, but this year we are going to go 100 plus cities in the current year. So these are going to be some of the priorities. Primarily, if you ask me, we're going to change the gear.
Okay, that's a priority going to be. But what about the overall picture, big picture? You said you want to enter new segments. You want to, break away from the overall image of being a commuter bike maker. Premium bikes are coming. Tell us more about the premium plan.
So firstly, this year you will see the maximum number of premium launches compared to any other year in Hero's history. And I won't give out the name, but they will roll out every quarter. And you will see very exciting product coming from our lineup. The second exciting part about this is the association with Harley. And very often we have been asked a question that while you may have the product, but what about the brand imagery? And Harley, as you know, is known as a premium brand, super premium brand. So therefore, the association of Harley and Hero is going to address that brand question. And the third thing we are going to do is to provide a different level of retail experience and retail excellence for our premium customer segment. And that you will see moving forward, where we are actually going to do a facelift of some of our current stores. We are calling them Hero 2.0, where a lot of our current stores will get a facelift and provide a much improved customer experience and services in those stores. Other than that, we are also going to have some number of exclusive premium stores as well.
Okay, and let's talk about the sales then. What kind of sales growth do you see this year because of the premium bikes coming, because 2.0? What kind of sales growth, better than industry or with the line with the industry?
So while I won't give any number guidance for our number for this year, but let me answer that in a different way, that overall, the economic indicators are tracking in the right direction. You look at the GDP growth, you look at the GST collection, you look at hospitality industry, you look at real estate, all asset classes are moving up. So plus the huge capex spending that the government is doing, it's going to result in higher income in the bottom of pyramid soon. So that gives a very positive picture of the economy in general. And then you have the two-wheelers specifically. Of course, as far as we are concerned, given that we're going to launch so many launches in the premium segment, therefore, we would rightfully expect an improvement in market share as well. So when you combine the industry growth and market share, you can very well assume what the growth of our portfolio will be.
Would you like to give a number to the launches, new launches, a dozen we are hearing? Is it going to be half a dozen, a dozen? And what about the product for the whole year? New product will come, or can you give a sense of the product plans this year?
I would still leave it to the guessing game, but all I can assure you is that every quarter you will see a new product launch. So not just a variant, but a new product launch.
We saw VIDA now, VIDA, your electric vehicle. A lot of things have happened. You have increased prices of VIDA. What's your outlook as far as electric play is concerned? What are you going to do with your electric vehicles foray?
See, the electric vehicle space is undergoing a rapid churn right now because of the change in the regulatory space which has happened. We believe that consolidation will be faster, and therefore there's only a few players who will be left. That's one. And second is the focus moving forward. Given the regulatory changes, the subsidy changes, one will have to double down on innovation to reduce the cost. And that's going to be very important for players to survive and make headway. As far as we are concerned, we are going for rapid expansion. As you talked about, 100 plus towns before the end of March.
And let's talk about your global foray. Yeah. Well, we have been seeing your Colombia operations, Brazil starting, a lot of other plans which have always been there as far as global foray is concerned. What about global expansion now? You are present in Costa Rica recently. What about the global expansion plans?
See, we have in the last 5-7 years, we've rolled out to 40 plus markets. Moving forward, what we're going to do is to disproportionately focus on the top 8 to 10 markets, while we'll continue to cater to the rest of the market. But to focus on the top 8 to 10 markets, maybe look at expanding in Southeast Asia, because that's a big geography which is here.
Right, with that, we're completely out of time on this edition of Market Cafe. Do stay tuned because the market will take the action forward. But for now, from Ankita, myself, and everyone who puts the show together, thanks so much for watching.